On China, I mean, it's interesting because this week it has been brought to our attention by Chinese authorities, the risks about financial stability. There's a great piece on the Bloomberg talking about the fact that China's financial warning signs are flashing almost everywhere. You've got defaults, weak banks threatening growth and financial stability. And because they're sort of wary of the moral hazard, officials have been sort of reluctant to step in. Has China been actually mismanaging its slowdown up to this point?
It's very difficult. I mean, they've got a real tightrope to walk, because one of the problems that you find is, and over the last couple of years, and this maybe explains a large chunk of the slowdown, is that private sector in China has been pretty much being starved of credit. Now, as China has been trying to sort of combat financial, bank and non-bank kind of credit risks, and you've seen that, the credit spigots have been turned down a little bit. What you've automatically found is that credit within the economy has gravitated to the areas where there is an implicit state guarantee. Now, those areas, unfortunately, are also the areas where the return on assets is lowest and the leverage is highest, and so credit is automatically going to where it'll be less productively used, and essentially the state-owned enterprises. That's a difficulty for the Chinese. It's not quite sure how you get around that at the moment.
How do they get around the stimulus issue? Because a lot of people say to me that any stimulus that they do implement this time round, particularly if it's of any kind of big bang nature, it's not going to have as much impact as it has previously. Yeah,
and I think there seems to be a reluctance on the part of the Chinese authorities to do anything kind of big bang. This is very much kind of, what is the old saying, feeling your way across the river by touching the stones kind of thing. I'm sure I'm misquoting Deng Xiaoping on that front, but you get the impression...
It's all right, because you never misquote Homer.
Yeah. True. But the point, I guess, is that they will want to do something very gradual and very steady. But more broadly, I think the sort of, the demands on the Chinese authorities are for reforms. How do you get credit to be more optimally allocated across the piece? How do you stop this kind of closet nationalisation that's going on as the private sector becomes ever more starved of credit and collateral put forward in terms of shares, and therefore the only ones left to buy it are the state-owned enterprises?